welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us is Ryan McCormack, senior factor and core equity strategist at Invesco, to discuss weekly performance in the QQQs. We'll take a look at what's been contributing to the performance, and we're going to take a deeper dive into what's going on with Nvidia. It is great to see you as always, Ryan. Let's quickly review what happened in the Qs over the past week.
Yeah, so QQQM and QQQ down 1.19% over the past week, and that underperformed the S&P 500 up 36 basis points and S&P 500 value up 1.42%. Largely, this week was pretty quiet. It seemed like markets were looking for some direction, and this is kind of amid comments from Fed officials. So, yeah, James Bullard, the St. Louis Fed president, kind of noting that the Fed needs to keep raising rates because there's only been, limited effects on the observed inflation rate, and almost, identically, the Boston president, Susan Collins, referenced a lack of evidence that inflation is actually cooling, and she kept the door open specifically on a 75 basis point hike in December. So I think that sort of ruffled some feathers. I think, anytime the Fed takes a more hawkish stance, you see QQQ and growth stocks come under pressure. If you look at today, we saw a bevy of economic releases. Results were largely mixed. So you had higher than expected initial jobless claims and continuing claims. You had a big miss on S&P manufacturing PMI and services PMI. You had a big surprise to the upside in University of Michigan sentiment and an improvement in inflation expectations for that reading. Tack on a better than expected new home sales print, and that kind of wraps up a day of data that is very mixed. And I think, this is an example of the tightrope that the Fed's walking. You're trying to go through this inflationary environment that may be cooling. You still have, very limited signs of an employment market that's cooling, and then economic releases that are somewhat all over the map. Today, however, we did see the release of the Fed minutes from the November meeting, and contrary to Fed President Bullard and Collins's comments, seem that more Fed participants are in the camp of slowing the speed of rate hikes. And we've seen inflationary readings since the Fed meeting in early November that have come in lighter than anticipated. So it does seem like the case is building for a 50 basis point hike in December. Obviously very subject to change, in the market, will continue to be very headline driven and focused on it.
And Ryan, if we look at sector performance, what contributed to the performance last week?
Yeah, clearly defensive, right? Defensive sectors. So utilities, staples, healthcare, industrials, sectors where QQQ is largely underweight. They were the best performers of the week and led relative performance for the S&P 500 against QQQ.
And finally, Ryan, let's take a look at Nvidia, because that was one of the darlings of the COVID-19 recovery, and it seems as some of these stocks had outperformed their peers within a sector. They also kind of had a harder bit of a fall as well.
Yeah, for sure. And Nvidia kind of is one of the later reporters in terms of earnings. It's been very choppy over the past year for Nvidia, and this past quarter they did report quarterly sales that beat analyst expectations, largely around strength of data center, which has really been the focus for Nvidia's earnings. But we saw revenue decline by 17%. That's kind of the worst revenue growth that we've seen since the middle of 2019. Guidance for next quarter's revenue was a little bit light compared to analyst expectations, but in looking through a lot of the analyst commentary, you have a number of folks that are talking about how this may be the trough for revenue growth. Right, we may see a reacceleration of revenue growth as we head into 2023. Something to watch besides the continued strength in data center offerings are the effects from the strained relationship with China and Nvidia's ability to access that market. The worry is their AI and advanced chip technology may be blocked from accessing the Chinese market. They're now talking about that they have a separate offering that is fully fully within the requirements for exporting to China. But anytime geopolitics is involved, I mean, there's a lot of back and forth. So something to watch besides strength in data center, and we'll see if that revenue growth or in this case revenue contraction year over year truly has troughed.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.